Welcome friends, this is Ramkumar bringing out the 34th episode of the Educative series. This will be a commentary on the IPO of Sellowrap Industries Ltd. This company is going to be listed in the SME segment of NSE. The RTA for this company is Purva Share Registry India Private Limited. This IPO opens from 25th July 2025 and closes on 29th of July 2025. As far as the disclaimer goes, I am currently not registered with any regulator in India like RBI, SEBI, IRDA, etc. The remaining part of the disclaimer you can read at leisure on the screen in front of you. Now we will talk about the remaining details of the issue details. As we mentioned, the IPO is from 25 July to 29 July 2025. For anchor investors, there is a window open on 24th of July 2025. The issue size is 36,48,000 shares of rupees 10 each. So since this is in the SME segment, there is a market maker reservation where 1,82,400 shares are reserved for the market maker. So the net shares available to the public is 34,65,600 shares. The minimum allotment would be 1,600 shares. However, minimum application size is 3,200 shares. This is a book building issue with a price ranging from 79 to 83. At 79, you will have to apply for minimum of 2,52,800. If you were to apply at the upper cutoff, minimum would be 2,65,600. There is no employee reservation for this particular IPO. If you look at the registered office and corporate office of the company, it's both of them are operating from Mumbai, Maharashtra. If you look at the factories or manufacturing facilities, the company presently has 4 locations across the country. One being Gurugram, second in Ranipet, third is in Kanchipuram, fourth is in Pune. Approximately these 5 put together would be producing all the produce that is required by the company in terms of finished products. The company is appointed the BRLM, that is Book Running Lead Manager, as Gretex Corporate Services Limited. Market maker is also Gretex Share Broking Limited, which is a group company of Gretex. The underwriter happens to be both of them. Gretex Corporate Services Limited contributing to 50% of the underwriting in terms of number of shares, and Gretex Share Broking contributing the remaining 50%. Now we will see that the company has been founded in 2004. It's in the business of customized components manufactured for automotive industry, non-automotive industry, and white goods. Majority being in the automotive sector. So this is a highly competitive sector with so many companies vying for their space in the market. To that extent, there is always going to be pressure on the company in terms of being able to maintain business. Another issue that the company faces or will face is about the counterfeits. There are many of these parts are available in the local sector. There could be quite a few counterfeits which could create reputational risk for the company. If you look at the objects for which the IPO has been, the money through the IPO has been raised, it is for capital expenditure on creating one more facility, working capital for smooth running of the company and to ensure that they are able to run at capacity utilization, and of course general corporate purposes. Since the rule says that for money being raised which is less than 50 crores, there is no monitoring agency requirement, or it is not mandatory. The company is chosen not to appoint monitoring agency, so any expense will be overlooked by the management of the company and the board of the company. Conflict of interest is very much prevalent here, because the land on which the company is set up or the factory is set up belongs to the promoter, and the company pays rent or lease money to the promoter. If you look at the financials, we'll look at the financials for the 3 years 23, 24, 25. The revenue for the 23 is 131.76 crores, followed by 138.02 crores, followed by 162.45 crores. If you look at profit, it was 2.86 crores, followed by 5.94 crores, followed by 9.97 crores. So the profit is increased a little bit, almost 7.5 times, 6-7 times. The assets at the same period was 92.82 crores, 99.79 crores, and 143 crores. So the assets has increased by about 40%. If you look at EPS, the weighted EPS on diluted EPS calculation is 7.81. If you look at it from the point of view of the PE, profit earning ratio, then at the lowest price it is 10.11 and the highest price it is 10.62. Now the usual the usual factors which affect any working of any company in the country is the government, the policy, the taxes and tariff, and regulatory. We'll take all these four together. So here there are quite a few challenges that the company could face in terms of anti-dumping, exchange rate fluctuations because of certain government policies which may affect the exchange rate positively or negatively. Of course, the government rules and regulations governing this particular industry and the land where this company is operating from, area or geographical area where this company is operating from. When I say company, it is the registered office as well as the manufacturing facility. There could be political issues with respect to some of the areas where the company is operating from. The most important aspect could be the downgrading of the country itself, which could create issues in terms of the company not being able to sell enough of stock. Of course, positive is that the upgrading of India rating might ensure that the company is able to get better sales. The last but not the least is inflation, which affects every company, and same is the case with this company also. There are no tax benefits available to the company for the new location that they have chosen to get the manufacturing facility created. Now litigations, there are quite a few litigations which totals to about 9 crores, a little bit more than 9 crores. If any of these or all of these goes against the company, there could be a whole of 9 crores in terms of lesser profitability or the bottom line being hit by this much of amount. If you look at it in terms of revenue breakup, the maximum revenue is received by this company within the country from 4 states, that is Tamil Nadu, Maharashtra, Haryana and Karnataka, which contributed 85.82% in 23, 85.54% in 24 and 87.76% in 25. So you can say that almost 88% of the revenue comes from these 4 states, which is a concentration risk. The company has made a revelation that the records of the beginning of the time when they found with respect to the amount paid by the promoter to acquire shares of this company is not available neither with the promoter or with the company in terms of the bank statements, etc. To that extent, the value of the shares is based on whatever is available with them, but not supported by bank statement, etc. The office from which the company operates is on lease on rent, which is in the name of the promoter, and they don't have a agreement, so to say, but there is a letter of engagement that the promoter has entered into with the company. Same with all the manufacturing facilities, they are owned by somebody else, a third party, so to say, while the company is operating from these facilities. The top 10 customers, if you were to see, contribute to 82.34% in 23, 79.20% in 24 and 74.54% in 25. So if you see the top 4 customers, again the revenue is skewed towards the top 10 in terms of almost 75% coming from them. So this is a concentration risk in terms of the ability to bargain on the price, etc. The companies mentioned that the cash flow is negative. The debt equity ratio was 1.11 in 2023. This is in number of times terms, 0.96 in 24 and 0.81 in 25. So this seems to be on the good side in terms of it being reducing. If you look at it in terms of loans taken by the company, The company has taken 30 crore rupees in 2023, followed by 31.7 in 2024, followed by 38 crores in 2025. If you look at operations, the operation needs to be smooth, but is heavily dependent on the auto industry. So any blip in the auto industry could create issues for this company in terms of them not being able to use the capacity, use the facilities to their capacity. The quality needs to be maintained to ensure that they continue being able to sell in the market. Since they are in the auto industry, the quality is very important, and the companies themselves are very quality conscious. Last but not the least is the disruption. Since the auto industry is continuously evolving industry, as we have seen, there could be issues where, because of disruption, there could be issues with respect to some of the spare parts being obsolete and some of the spare parts being having to be made in a customized manner. So this could create issues in terms of the company not being able to continue smooth operations, and there could be break in the continuity. The company is saying that the insurance could be inadequate, as they are looking at the insurance on a periodic basis. Presently, it's fine, but if there is a reduction in insurance for a small period, and that point in time there is some accident or some eventuality, the company may not get the entire insurance reimbursed, entire expenses reimbursed. To that extent, there could be loss booked by the company. There has been no pre-IPO expense issuances as is declared by the company in the prospectus. In terms of agreements, there are no long-term agreements signed with either of the buyers or sellers, clients or the customers or the suppliers. In terms of non-compliances, the company has been non-compliant in filing of PF from June 2021 to July 2023, ESIC in August 23, ROC, the forms related to Companies Act in ROC on 2004 to 2024. This seems to be a very large period for which the forms have not been filed on time. As far as GST is concerned, it's from May 21 to October 23. The company said that they have put some internal control in place to ensure that such non-compliances do not occur in future. So after 24, we have seen that they have not recorded any non-compliance. So the extent seems to be working. We have summarized the RHP and placed it for you to peruse. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the correctness or otherwise of the price on offer, prevailing grey market price, possibility of listing day earnings, etc. Should you like this video, find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. Should you have any doubts, queries or suggestions, kindly contact me at ramkbharosay@gmail.com. Thank you.